This video is strictly for educational and awareness purposes only. I am not a CB registered analyst. The content discussed here should not be considered as investment advice. Please consult a certified financial advisor before making investment decisions. Did you know? Out of thousands of companies listed in the Indian stock market, only around 2% actually turn into true multibaggers for long-term investors. So what really separates a good company from a wealth-creating multibagger? Today, let's analyze a well-known auto ancillary company, Federal Mogul Goetze India Limited. Could this company transform into a hidden gem over the next decade? Let's explore. Federal Mogul Goetze holds an estimated 29% share in India's piston and piston rings market. That's a dominant position in a critical auto component. Automobile manufacturers like Maruti Suzuki, Bajaj Auto, and Tata Motors need reliable and established suppliers. Companies with monopoly-like strength often enjoy steady demand and pricing power. The company doesn't rely on just one product. Its range covers two-wheelers, passenger cars, SUVs, commercial vehicles, tractors, even locomotives. This diversity acts as a safety cushion. If one segment slows down, others can compensate. Federal Mogul supplies to India's biggest automobile names: Maruti Suzuki, Hero MotoCorp, Bajaj Auto, Tata Motors, Ashok Leyland, and Mahindra. The benefits: long-term partnerships, stable repeat orders, recurring revenue visibility. However, around 53% of revenue comes from just the top 10 clients. Heavy client concentration can impact business. Federal Mogul Goetze is backed by Tenneco Inc., a global auto component leader with technical collaborations in Japan and the UK. Strong focus on research and innovation, advanced piston technologies, including those compatible with EVs. This gives the company a clear technological advantage over many local competitors. The company pays a royalty expense of around 2% of revenue to Tenneco. Is this a concern? Not really, because in return, it gains access to global R&D and advanced technology. Compared to overall margins, this expense remains manageable. The Indian auto sector is still in a growth phase. Vehicle ownership per capita in India is far below countries like China and the US. Even with rising EV adoption, piston demand is expected to remain strong for at least the next 10-15 years. Currently, exports contribute only 7% of revenue. If this rises to 15-20%, it could become a major growth trigger. An open offer by Pegasus Holdings for a 25% stake in the company is still pending. Why is this important? Such corporate events often act as catalysts for stock re-rating, potentially improving valuation and boosting investor sentiment. Strengths: dominant market share, diversified portfolio, strong customer relationships, technological advantage, auto sector growth story, potential re-rating catalyst. Risks: heavy dependence on top clients, cyclical auto industry, ongoing royalty payments, low export contribution. For a multi-bagger, 3 ingredients are essential: market dominance, sustainable growth triggers, valuation re-rating opportunity. Federal Mogul Goetze checks many boxes. If it reduces client dependency and expands exports, it has potential for long-term wealth creation. But remember, multi-bagger journeys usually take a decade or more. Patience, disciplined investing, and diversification are key. What's your take? Do you see Federal Mogul Goetze as a hidden gem or just another auto ancillary stock? Drop your thoughts in the comments below. Once again, this discussion is for educational purposes only. I am not a CB registered analyst. This is not investment advice. Please consult a certified financial advisor.